Hello students, in today's class we are going to discuss the hire purchase system. In hire purchase system, default and repossession. Let us see, if any installment is not paid, we call it as a default in payment. Sometimes the hire purchaser is unable to pay off the installment. In that case, the vendor has an option. He has a two option to recover the balance of amount from the purchaser. First option, to file a suit in the court of law for recovering the balance, but if it is continuous process. Second option, to repossess the goods sold. The second method is easy and simple to follow. And when the purchaser makes any default in paying installment, the vendor will repossess the goods and recover the balance from the sale proceeds of it. If there is any surplus, amount will be repaid to the hire purchaser. The repossession of goods, that is either a full repossession or partial repossession. So students, in today's class we'll be discussing about the full repossession. Let us see what is full repossession. For recovering the installment amount due from the hire purchaser, the vendor may repossess all the goods that are already sold under the hire purchase system. Then it is called full repossession. So here the specimen for let us see the model ledger accounts to be open in case of default. Here the hire vendor account, usual hire vendor account we used to prepare, and similarly the assets accounts also, it is the same as we prepared earlier. Now let us move on to that is in the books of the hire when purchaser. Now in the books of the hire vendor, we used to prepare the hire purchaser account. This is the usual account we used to prepare. Apart from this, we are going to prepare the repossessed stock account. So here on the debit side of the repossessed stock account, the hire purchaser account, cash, and credit side, buy cash for sales. If it is loss on sale, it will come on the credit side. If it is profit on sale, it will come on the debit side. Let us see a question on default and repossession. Ram purchased a van for rupees 42,000. Payment is made as rupees 10,000 down and 4 installment of rupees 10,000 each at the end of each year. Interest is charged 10% per annum. Buyer depreciate the van at 10% on WDV method. After having paid the down payment and the first installment at the end of the first year, could not pay the second installment, and the hire vendor took possession of the van. The hire vendor, after spending rupees 1,280 on repairs of the van, sold it for rupees 31,000. Prepare important ledger accounts in the books of both the parties. Now you all know that the first calculation is interest calculation. Let us proceed with the interest calculation. For interest calculation, we need to see the cash price, that is 42,000, installment to be paid, down payment to be paid 10,000, 4 installment of 10,000 each, and rate of interest is 10% per annum. These are the required things to calculate the interest. Let us go and prepare the interest calculation. Here the calculation of interest up to the year of default. First one, the cash price, that is 42,000. Now the cash price, as we have written, 42,000 here, less the down payment 10,000, then the balance will be 32,000. Out of 32,000, rate of interest is 10%, that is 3,200, and add the interest, will get 35,200, and again less installment of 10,000 for the first year. So after deducting the installment, the amount comes 25,200. Now second year interest calculation. So 25,200 into 10 by 100, it is 2,520, and total comes around 27,720. Now in the second year only we are getting a default, as we have seen in the question that after paying the first year, after the end of the first year, you could not pay the second installment. So installment amount is not paying, but we will calculate the interest for the second year. So we have calculated the interest for second year. The value of repossessed stock is 27,720. Now next, calculation of depreciation to the year of default. Cash price of the van is 42,000, less first year depreciation 42,000, 10% on WDB method 4,200. After minusing 4,200, the value of van after first year 37,800, less second year depreciation out of 37,800, 10% 3,780, and the balance comes around 34,020. Now see, as the value of repossessed stock is 27,720, so value of the asset, that is the value of asset, is 27,720. Now the value of asset after depreciation comes around 34,020. So the difference is loss, because the value of repossessed stock is 27,000. The buyer depreciates at 10%. So after the depreciation, we are getting 34,020. So the difference is loss 6,300. Right. Next, we'll move on to the ledger accounts. In the books of the hire purchaser, we'll record hire vendor account. First one, purchase of van on hire purchase system, cash price 42,000. So buy van. So first year interest 3,200. First installment down payment 10,000. First installment 10,000, and the balance comes around 25,200. Bring down here, brought down. Then second year interest calculator. Second year there is a default, so the value of repossessed stocks comes around 27,720. Now let us see the assets account. That is van account. The van account by hire vendor 42,000, depreciation 4,200, and the balance we have 37,800. So this is very simple. When you see this table itself, these two tables, you can prepare all the accounts. Here you see cash price, first year's depreciation. Similarly, second year depreciation, because the default comes under second year. So here by depreciation first year, so balance brought down, second year depreciation 3780, and now the value of repossessed 27,720 and the loss of 6,300. These are all things we have calculated here itself. You see here calculated, so we have got it. So after preparing the asset account, so we have completed in the books of the hire purchaser. Now we will move on to the ledger book in the books of the hire vendor. So in a hire vendor account, hire vendor books, we will prepare the hire purchaser. So it's like sales to interest. So interest 3,200, down payment 10,000. We'll write by bank, and for installment 10,000 by bank. The balance comes around 25,200. Brought down here again second year interest, and now in the second year there is a default, so repossession takes place. So here the value of repossessed stock is 27,720. Now there is an additional account. Now let us see the last and final account to be prepared is repossessed stock account. In repossessed stock account, to RAM 27,720, we have repossessing the stock value worth of 27,720. Here the value is, so bring down here. And next is we are spending 1,280. That is given in the question, that they are spending 1,280, and we are selling the van for some other person for 31,000. So we are selling the van for, so we are spending on the asset is 1,280, repossessed stock account data to bank account, and we are selling it for 31,000. So balance it, we get a profit of 2,000 rupees. So with this we have come to the end of the answer. I hope you have understood, and if you have any doubts, please ask your doubts by writing in the comment section. Thank you.